company on our radar right now is Marico. The company has reported a revenue decline of 0.8% on a year-on-year basis. This is slightly less than what the street was anticipating, or not as bad as what the street was anticipating. The domestic volume growth has come in at 3%, largely in line with expectations of 2 to 3%. The company's reported EBITDA margins of 20.1%, reporting an expansion versus 17.3% same time last year. And this is despite higher ad spend. So the company's managed to expand their margins despite higher ad spends, and profits have gone up by 17.3%. The outlook shared by the company is that revenue growth will move into the positive territory in the second half of the year. The gross margin uptrend will continue. They're anticipating a 350 to 400 basis points expansion in margins. The advertising and promotion, the A&P spend, is seen at more than 9.5% of sales in FY24 versus 8.6% in FY23, while the EBITDA margin is seen higher by 200 basis points. To discuss the outlook and more, we're joined by Saugata Gupta, the MD and CEO of the company, to take some questions. So thank you very much for joining in. First, the revenue growth in H2. Will it largely be because prices are in the base, or do you expect some consumer sentiment recovery as well?
I think it's a combination of both. If you look at whatever price corrections, the anniversarization has happened, and therefore there will be no price deflation in the base going forward, and therefore volume growth and revenue growth should be in tandem. Obviously, we are expecting some volume recovery. I think one of the indicators which is there is that this time in this quarter, we are finally seeing, at least in our core business, the offtakes are slightly higher. They're trending higher, and therefore once the offtake starts trending higher, that reflects in your sales the following quarter. And I would think that the fact that although there was some kind of uncertainty in August, finally the monsoon was more or less okay. There would be, as we go in the next 2 quarters, there would be some rural recovery, and therefore a combination of both a volume improvement and some kind of the deflation factor not getting into place will lead to a positive revenue in the next quarter and the following quarter, the next 2 quarters.
Okay, got that, Mr. Gupta. So you're sounding optimistic about the second half. So let's translate that to volume growth. You've done, I think, 3% in Q2. How is the second half looking, and what can the volume growth be for the year as a whole?
So it's difficult to, I don't want to fathom on this one, but I am reasonably sure there will be some recovery happening. I think the first 2 quarters were both 3%. We were expecting some improvement in Q2, which didn't happen, as I spoke about, because we had a decent July, but there was some uncertainty in August in terms of the rainfall, and therefore I think there will be also, as I alluded to yesterday, there was some STR correction that happened in retail outlets because of the credit issue, and therefore I think we should be able to improve the volumes. Very difficult to fathom guess a number right now at this stage.
Okay, should be able to improve, versus the kind of 3% that we've had both in this quarter as well as in the last one. Let's talk about the international business as well now, because the contribution of that has gone up. It now makes up around 25% of your revenue. Do you have some kind of growth target, any kind of aspirational target here?
Fortunately for us, our home market is also invest to grow market. So therefore, I would think that unless we make some, and we have been extremely focused on driving organic growth rather than doing acquisitions. We are in markets which have a long economic growth story. There could be obviously some short-term hiccups which we are experiencing in some of the markets with respect to economic growth and currency. But I think what we have essentially done is ensured that in all the markets we are present in, we have a kind of a product portfolio. We have headroom for growth. We have ensured that we have a go-to market can then drive that. A cost structure that can ensure that we have investments to drive growth. And lastly, I think leadership. And I think the leadership has bandwidth. So we are working on some, as you know, we did some tuck-in acquisitions in Vietnam. We believe that there's enough opportunity for growth in the existing markets and the adjacent markets. And therefore, I would say that our aspiration is to ensure that we continue to deliver double-digit constant currency growth in the international business while maintaining these profitability levels.
Okay. You recently entered new categories during the quarter. Shampoo, body wash. How much do you think these categories will contribute or grow for you going forward?
Shampoo has been launched, and I don't think there's been shampoo launch in India. As such, the only thing which we are doing is, along with hair oil, we are bundling it. That's just an e-com initiative. So that's, I think, a very, very tactical initiative. Similarly, is body wash. See, what we are doing is that our ability to participate in broader set of categories in e-com, given our capability which we have developed in our digital business, and therefore it is a kind of a prototype or a kind of a test and learn model which we are doing. So I don't think, as far as in the mass segment is concerned, both these categories we currently have any ambitions at all. Having said that, I think we have proven that we can participate in this category. So we have launched, as you know, and we are doing fairly well as far as shampoo is concerned in Bangladesh. Also, we are now prototyping this shampoo in the same mix in some of our Middle East markets. So I think we are increasingly, as I said, that expanding the total addressable market through both our power brands, Parachute Advanced and Saffola, and therefore participating in more categories. As far as India is concerned, I think it's too premature to actually even think about participating in these categories at a mass level.
Okay, so you're testing the waters with some of the neighborhood markets and not yet in India. But Mr. Gupta, there is so much excitement in this space, beauty and personal care, right? I mean, look at what's happening with the Mamaearth IPO. We're talking some absolutely heady valuations there. So given this buzz, given the way the market's opening up, are you looking at any other spaces, any other segments beyond your core categories that you would want to enter into?
If I look at it, I think in any category, I think what the D2C brands have done, they have opened up certain premium price points. They have been able to quickly latch on to some of the trends on ingredients as concerned. And therefore, as you know, that we now have a very, very robust, digital business. Our capabilities with respect to, capturing trends early, prototyping fast, and scaling up if the opportunity is there. And therefore, whether we do it through, we have recently launched a set of hair oils, premium hair oils in e-commerce under the Parachute Advanced brand umbrella. We have another brand called Just Herbs, which also has the capability to participate in that category. And therefore, we will continue to ensure in both hair care and skin care, we participate in this category and get a fair share. I think the biggest thing in the digital business which we have been able to achieve is, I believe now we have a scalable, profitable business. Our cash burn has tremendously reduced. Some of our brands are going to turn positive by the end of the year. And therefore, at a 100 plus crores or a 150 plus crore level, we can show a proof of, scalable businesses which are also profitable.
Okay, Mr. Gupta, you're saying some of your brands are going to turn profitable, by the end of the year, some of the D2C brands. So which ones are you talking about here?
Definitely Beardo is going to deliver profits. The cash burn in the both Just Herbs and, and Plix is very low. Obviously, Plix is on a high growth phase. Both Beardo and Plix, if you look at the run rates, are expected to cross 150 crores. And the fact that there is very limited cash burn or profits, I think, is a proof of the fact that we can scale digital business profitably, which compared to some of the standalone brands. I think what we have started the process, and it will get accelerated over the next 2-3 years, is the synergies we have. Because if you look at it, we are exiting 400 plus crores going to be the annual run rate in net revenue as we exit this year on a digital business. Next year, obviously, it will cross the 500 mark. I think at that scale and with a house of brands, our ability to drive synergies will considerably get accelerated. And therefore, we believe that we should be in top quartile with respect to our ability to scale digital brands profitably. Obviously, we are not best in the world in respect to creating brands. That I think the founders are far better in doing that. But I think we certainly have a model to actually scale them up profitably. And that is something which we wish to do.
Getting back to the guidance and particularly on margins, this year you've said EBITDA margins will expand by 200 basis points. But what about thereafter? Do you have the structural levers for margins to expand beyond 200 basis points post FY24?
Obviously, a lot of the margin improvement has happened this year because of, in terms of tailwinds in raw material. And some of the improvement that has happened is improvement in gross margin as far as, food is concerned. I think with respect to digital business, it's more management of, the A cost or the advertising and other costs. It's not in margin actually. Now, I think long term, we believe that, there is obviously commodity volatility and cyclical, and some of the commodities are cyclical. I think what we have believed in always is that our effort is to maximize volume growth and market share subject to a certain level of margins. In the past, it was 19 to 20. Maybe that number will creep up, but I think our long-term choice is to ensure that we maximize volume and revenue growth and subject to a certain level or a threshold level of margins. I think what we need to do obviously is to maintain that is as we scale up food, and food makes lower gross margin than the rest of the portfolio, we also ensure we continue to premiumize the core and successfully scale up digital business. I think it's important to ensure that in the next 3-4 years, the digital business, which will be critical mass, has the ability to deliver an EBITDA which is equal to our overall, EBITDA of the business.
Finally, Mr. Gupta, tell us a little more about what you have in mind with respect to inorganic growth. Any acquisitions in any other categories you may be looking at?
Done quite a bit. It's right now, I think our focus will be to ensure that we profitably scale up. And as far as digital business is concerned, our preference is to ensure that we give steady growth and profitable growth as opposed to trying to drive exponential growth. So therefore, a model of, getting into quickly in the next 2 years into overall profits, along with a 20% growth as opposed to trying to drive 50-60% growth. And that's the model we want to adopt in the next few years going forward.
All right, Mr. Gupta, we will leave it at that. Thank you very much for joining us and taking us through Marico's earnings as well as what you expect going forward as well.